Hey everybody, it's been quite a long time since I've posted on YouTube. Haven't posted anywhere, um, Discord or anything. Been completely MIA for a few months, had a lot going on. But I am trying to come back now, build back from the ground up, get my crypto game going, um, my other businesses and all that stuff. So I have a family to provide for. I got to get to work, and part of that is my day trading business, which was a big drop my phone, big portion of my income. So I need to save up some capital again and start trading again. So my first priority is to start to make sense of this bear market. For those who were around, followers of mine on social media platforms before my accounts got nuked, know that I came up and really became an excellent trader with well designed predictive models in a bear market. So a bear market does not scare me. It actually makes me feel more confident that I have what it takes to come back and really get my edge back in a bear market. Looking at the long term right now in BTC, since I haven't really gotten back into the game too much yet, I'm just looking at the long term. With this bear market, it looks like it can certainly extend. There are a lot of geopolitical factors at play, but if you look at the weekly model, you can see it bounced exactly on the 222 EMA, so the technicals are still there. My Ichima model, which is my technical model that I base most of my trading on, um, is very accurate. And I've had a lot of successes with it. And you can see here, this is why that 222 EMA seems like an arbitrary number, but it's a really incredibly strong long-term support on that weekly model. Plus you have the low stoke on the weekly. You had a full reset on the monthly. So everything technically with the 55 EMA coming up right here on the monthly, you can see the 55 EMA, the yellow line right there. Everything makes me feel like it could be really bullish. The problem is there are a lot of geopolitical factors in play. We have war, international conflict, potential looming recession that's about to hit. There are a lot of factors to consider outside of the technicals. But if I'm purely looking at the technicals, if we're only talking about the charts, I would tell you that there is a lot of positivity in what I'm seeing on the long term charts. The problem is that positivity doesn't mean much with a looming recession and a potential World War III. So I don't know what to say long term just yet. I just want to remind you that even when you have fundamentals and geopolitical scenarios and various other influences on the market, it's reassuring to see that the technicals, those technical models that I've relied on for years, are still holding very well. So if that 222 EMA holds, that could potentially be the bottom before a very strong bullish bounce. We could see it bounce easily back up to the bottom of the cloud to 36K or so, and that could happen over the course of a couple months based on those stochastic oscillators being really low. That means we're about to build up momentum and make a big turn up. Based purely on the technical models, I would be extremely bullish here about a very, very nice bounce into the low 30s, potentially again as high as 35, 36K. But again, it's not all about the technicals right now. There are a lot of other factors at play. Just something to keep in mind. I'm going to dive into this stuff a lot deeper as I get in my groove and kind of get back to work and get back into the game. But at least my initial insight from a purely technical perspective is that there's a lot to be bullish about, and we have to watch and see how these other things come in, and start giving us a clearer picture of where we're going to go. As I dive into this stuff more, I'll do more updates, and hopefully you welcome me back with open arms, and we can make some good trades together. All right, that's it for now. Trade safe, trade smart, and I will see you on the next one.